Horlicks Network 18, Mission Poshan, Bhavishya Roshan.
Let's pose all of these questions to SP Tulsian of sptulsian.com. He joins in now. Mr. Tulsian, good morning. Before asking you about the banks and NBFCs, I wanted your thoughts on some of these power companies, Tata Power, Reliance Infra, Adani Power, etc. There's a draft power policy proposal that has been put forth which suggests that DISCOMs would have to pay a penalty now for load shedding and would not be reimbursed for the AT&C losses, etc. In general, what is your view on the entire power space and any opportunities here?
See, academically, this provision looks really very good that yes, this is seen to be a quite big relief for the power generation company. But in fact, that is not seen happening at the DISCOM level. In fact, this is what we have been seeing for last 3 to 4 years, that all the efforts are seen being made by the government to put pressure on the DISCOMs, but they have been coming out with some reason or the other. In fact, maybe earlier there was no power lifting, but but after having put in huge capex in T&D spaces, the power losses has definitely got reduced. But the power consumption have not seen increase. But now with the power for all and all the district and villages having electrified, electricity have reached at the village level. Probably the things are seen on an improvement, but the financial health of the DISCOM is still seen to be need to be improved. And looking specifically, taking a call specifically on Tata Power and Adani, I will come Tata Power and Adani. I will come on the other power generation company little later. But on Tata Power and Adani Power, I think the sore point is mainly the two power projects which they have in Gujarat. For Tata Power, it is Ultra Mega Power project of 4,000 megawatt, and for Adani Power, it is 4,800 megawatt. And both are based on the imported coal. And unless until you see the financial resolution seen happening, because both the companies are prepared to offer 51% stake at a nominal price of 1 rupee, but nothing is seen happening on that front as well. So unless until you see some resolution for both these companies, I don't think that there is any kind of respite. Coming on the other power generation companies, the things are not seen to be quite positive again for the gas-based power projects. But I'm only referring to the thermal-based power projects where the things are seen to be quite good in place. And if they have a PPA, I think the generation capacity of about 10 to 12,000 megawatt is lying on that in that area, for which the PPAs are seen pending. That in fact will be seen a very big positive. Otherwise, I don't think that merely this small piecemeal relief being given via DISCOMs and all that will really be working well for the company. For both these projects, for Tata Power and Adani Power, as I said, solution has to be found at write-off. Take 51% stake whether by the government or by NTPC and allow the financial liability to remain with the existing promoter. These are the broader financial solutions which need to be found out, because power demand is going to get increased from here on, because once you have the power reach to at the point of the village, that is going to see the power consumption going up. So I don't think that the thing should really be problematic on that front, but the financial solution and resolution is more important for these power generation companies.
Mr. Tulsian, good morning, sir. All eyes, of course, on the cabinet meeting today to see what the contours of this sugar package will be like. I think numbers are doing around 7,000 crores. There's talk of, I think, 29 rupees MSP, etc., buffer stock. Do these measures sound adequate, and what can be the net result on the stocks?
See, taking total call on this package, what I in fact will draw the conclusion or inference that I only see one positive, that MSP of 29 rupees. And if the mills are able to, and I presume that whatever buffer stocks, likely to get created anywhere between 1.5 million to 3 million ton, whatever the government decides. So in fact, that is very much required, because part of the quantity has gone via exports. And if the part of the quantity can get converted or moved into the buffer stocks, that will really be seen positive. But at what price? And that's what I say, that I only see one positive, MSP of 29 rupees. And if that is fetched by the mills, I think that will be seen positive for the two reasons, because they will be able to see the recovery or higher realization by maybe about couple of rupees, number one. Number two, if you see the results of all these sugar companies are out of as of FY18 March quarter as well, March quarter as well, where the inventory have all been valued at sub 26. So whatever losses had to happen on stock price at cost or market price, whichever is lower accounting theory, that has already been factored into the results. And if they are able to fetch the realization of about 29 rupees via MSP, I think that will be seen positive by a couple of rupees. But I won't be taking this as a too positive or extremely positive for the sugar stocks. Because if you really take a call from 15th May, I think on or around 15th May, all the sugar stocks have formed its 52-week low, and from there they have already recovered by about 18 to 20%. Whether you talk of the UP-based sugar mills or maybe other sugar mills. So as a general, well, this news has largely got factored in. But going by the sugar package, I only find the positive for sugar mills this MSP of 29 rupees. Obviously, this will be seen very positive from a farmer's point of view. But if I'm taking the stock market point of view, I think this 29 rupees MSP is only seen the positive, which should really help by the existing sugar mill to fetch higher realization on the inventory by a couple of rupees.
Okay. Mr. Tulsian, just wanted your thoughts on how to approach, Capital First now. I mean, the news of the amalgamation with IDFC Bank, they've actually put it on the exchanges, so it's a done deal. But how would you approach that stock now?
See, that's right. In fact, RBI has given this, and both the IDFC Bank and Capital First have informed the exchanges that the approval has come in from RBI. So I think that now from here on the things are really likely to get accelerated. Maybe the other permissions of the regulator like stock exchanges, SEBI and all that should not take much longer time. In fact, I was expecting it to happen by September, but I think this has come maybe about a month earlier, and hopefully, if I'm not wrong, the whole merger process should get completed maybe by end of August, which otherwise was expected it to be in the end of September or in the middle of October. Now going forward this year, definitely the things will be seen extremely positive, because we have seen the numbers, extremely good numbers of Capital First for FY18 with 30% growth. But because of Capital First getting merged into IDFC Bank, it doesn't have its own leg of price discovery, and IDFC Bank, people are seen to be quite apprehensive. Going forward, if you go by the management con call of FY18, of IDFC Bank, the additional provisions of about 400 to 500 crore has to be get provided, which is again in the public domain, and I don't think that should really be a problem. So the growth areas for the IDFC Bank going forward will be to accelerate the book of the retail book, which is now seen at about maybe 25,000 crore, and that will get really increased. They will definitely be going lower on the wholesale banking. Capital First has the capacity and capability to expand in the retail, which they have demonstrated very well with 95% of their AUM in retail. So I'm extremely positive. In fact, if somebody wants to play on, and once this merger will happen, you may have the pain point, by making provisions of 400-500 crore by IDFC Bank, which is maximum till FY19 or maybe thereafter. Then thereafter, the growth will really be seen quite high. And maybe going forward, the retail book can grow by about 20 to 25% per CAGR for next 3 years for the combined entity. So both these stocks are seen to be ruling at its bottom, and I don't think that much of the destruction in the share price is seen, because even if you take the standalone or maybe the book value of the merged entity also of IDFC Bank, it works out at about 45-46 rupees, and now the share is ruling at 39.40. So even on a price to book of 0.8 with assets quality not so much deteriorated, the things are all seen to be quite good. Margin of safety is very well in favor of the investors, those who have a time horizon of about a couple of years to take a call on IDFC Bank.